Wall Street is lying to you, trying to make you become exit liquidity. That's right, exit liquidity for their Bitcoin, for their stocks, for their Nasdaq, SP 500. Look at this chart. This is a blatant lie. And they chose to do this blatantly. It's an obvious blatant lie, right? This is from Bloomberg Finance, from Wall Street. They're trying to tell you lots of oil. Look at this. Lots of oil is coming back, right? They're trying to say oil price is going down. But what if the opposite happened? This is an obvious lie, because what's the truth? See, they specifically chose this date, right? Early March, 2026, early March. And this will have huge implications for Bitcoin as well. You don't think Bitcoin would be affected if inflation suddenly jumps up? If oil price suddenly jumps up, then stocks crash. Then interest rates go up, right? Then basically bonds fall and bond yield spikes. What do you think is going to happen to Bitcoin? What do you think is going to happen to crypto, right? I can't be 100%, but at least I can show you what Wall Street is lying about. They chose this specific date. Look how much of a lie this is. I'll show you what the real chart looks like if we just put in a 12-month data. That's what it looks like. Can we see that? Can we see what that looks like? Let me move this a little bit, right? This is the real number of vessels crossing the Strait of Hormuz right now, right? That's the real number. Let me move this up a little so folks can see it better, right? So folks can see it better. So that's the real number of vessels. They deliberately chose to cut off all of this and show you the rest of this chart, right? So it basically means this isn't what it looks like normally from January already up to February. You could say people already knew the war was coming in Iran, right? The Hormuz Strait. And this is what normal looks like. This is what right now it looks like, right? Which is nowhere near normal. Nowhere near normal, right? And yet they deliberately choose early March to lie to people, right? And show you this chart. This is from Bloomberg Finance. Again, why would they do that? Why would they do that? Well, they do that to make you into exit liquidity, right? So look, what's the impact of this on Bitcoin? What's the impact of this on stocks? As we can see, Bitcoin basically obviously goes down when the Iran war kicked off, right? So like I was predicting for this orange line to play out. And so far we've got two things right. We've got the bounce up, right, to low 80s, and we've got the move back down to just below 60, right? And then I'm waiting for a bounce. I think it'll come in probably late July or early August. But we can see when the war started, basically, it didn't follow the plan. It was going up, see? See the orange line for Bitcoin? See, it's going up, higher high, higher low, higher high, fake out, tops, right? And then comes back down. But the Iran war, oil price spike, boom, crashes everything, right? It crashes everything. And we can see how it applies to the stock market as well. Iran war happens, we can see SP 500 crashes, right? Crashes. The Nasdaq went down something like 14%. Nasdaq went down even more, 14%, right? So right now, and it's because of oil. It's as simple as that. It's because of oil, because of inflation. Oil kicks up, inflation kicks up. It's as simple as that. Now, I'm not just talking, right? I'm also actually positioning myself in terms of the oil trade as well, right? Have a small position here, right? It was too early, right? I don't use a lot of leverage, right? Only 4 or 5x. And here, I'm putting a bigger position because I felt like we got into place at around 67. But here's the crazy thing, right? Here's the crazy thing. Why would you make a chart like this? An obvious lie. Why would you do that when you know this is actually what's happening? Like if you are, imagine you're the guy at Bloomberg and you're like, oh, I have to write a report today about what the situation is with oil, right? Well, then don't you think that would be the chart to show people? That would be the chart to give people perspective what it was like before the war, which was already down. Traffic was already down because people were expecting Trump to attack. Trump was talking about attacks all this time. Who would want their ships going through when Trump was going to attack Iran? He's been talking about it for a few months leading up to this. So this is how much, like what, average about 140 to 160? Let's call it 150, right? 150, we take the mid value, about 150, 140 ships per day. And here at its best, we hit what? We hit 70 or 80. In other words, half as much as before. Imagine deliberately cutting off this part of the puzzle, piece of the puzzle, just to show you this, right? Just to show you this. What effect does that have? That has the effect of showing people, oh, oil is coming back online. Oil is coming back. Inflation, supply of oil is going to be huge. That means inflation is going down. Inflation is going to go down. Therefore, stocks are going to take off, right? At least that's the intention. Are they going to be right? Right? I still remain bullish for a few more weeks. For like a few more months. I've been saying 3 months to 12 months, right? Somewhere between the next 3 to 12 months, I think that's where the top of the market comes in. Likely early 2027. Early 2027. And the thing is, so I'm not bearish, but it does make me worry when Bloomberg, which is basically Wall Street's little broadcasting station, when Bloomberg basically tries to do an obvious lie like this, what are they aiming at? Are they looking for exit liquidity, right? So here is how it impacts Bitcoin and the stock market. Because the Federal Reserve has to react to inflation and what oil prices are doing. And all of them for the last meeting, this is the Fed meeting minutes, which we are only seeing today, We don't know who voted for what until now. Now we know all of them supported keeping interest rates on hold. A few of them suggested they could get a rate hike. Rate hike. Imagine if inflation and oil prices took off. Would we get a rate hike then? The Fed staff raised their 26-27 inflation forecast. So they're seeing higher inflation in the next 6 to 12 months. In the next 6 to 12 months, they're seeing higher inflation and lower GDP projections. What does that tell you? What is that to upside risk? Chance it goes to the upside for price stability. That means prices go up, inflation go up, but GDP goes down. What do you call that when GDP goes down and prices go up? That's called stagflation. That's pretty bad, stagflation. How would that affect Bitcoin, stocks, and gold and silver and oil? So the Fed, it's already pricing in. Like the Fed, when they had this meeting, which was late June, in late June they had the meeting, they could already see that oil price was falling, right? So what was, this is delayed by something like 3 weeks. But in late June, when the Fed was having a meeting around here, oil price was already coming down. It was already like around the 70s, right? It went from like 110 down to the 70s. So they could already see oil prices coming down. But yet the Fed is still predicting their own staff are raising their inflation targets for 26, 27, and lower GDP. Stagflation is the worst kind of thing you would want, because stagflation is basically what happened in the 70s. It's the worst nightmare for central banks, especially for the Federal Reserve, because it just means that what do you do if you have high inflation and you have low economic growth, low GDP? Do you cut rates or do you hike rates? You're stuck. You can't do either. If you cut rates, inflation goes up further, so you can't cut rates. You hike rates, and GDP is already low, and then GDP is going to crash, right? So we could be headed into an era like that. And if it does happen, then let me show you guys. The only thing that might work are these two bad boys. The only thing, because this is the only thing that worked in the 70s. There were two major wars in the 70s. Involved in the Middle East. One's around 73, 74. I think that's called the 6-Day War, the Yom Kippur War, involving Israel and 8 other nations surrounding them. And then 1980, which was the Iran War, Iran and Iraq, the Islamic Revolution of Iran. So, but look, this is what happened when stagflation happened, right? This is what happened to gold, right? So just before we get onto that, let's have a look at SPY. What I've been saying for SPY is, first of all, we have 3 red bars, and then we bounce off the channel, the green channel. So here be the green channel, here be COVID, and we can see how important this channel is. I've explained this many times before. 3 red bars, and we bounce. Well, what we got was 4 red bars. Okay, missed it by 1 bar. I said 3 red bars, and we bounce. We got in there in 4, and we bounce, and now we're already back to This is the second highest close of all time. Second highest weekly close of all time. Now it depends on how Friday finishes up, how what the trading action is when we close on Friday. We don't know that just yet. But if we close somewhere here, if we go up another 1%, close somewhere here, that's pretty significant. Yeah, second. Not only is it the second highest weekly close, but we are also in a major bull flag. Look at this. This is a major bull flag. Look at this bull flag. It's basically boom, 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 right? That channel. We can come back into the channel and trace some more and then bounce off, right? This top edge of the channel again. We can bounce off this 720 area again, right? One more dip, right? Or we can spend Friday and close somewhere like 750, 455, and that'd be another strong weekly close, and we break out of the bull flag and we go up again. And either way, it's not, there are pros and cons. Like if we basically close up on Friday, right, later today on Friday, and we break out of this bull flag and the market just continues going up, that's great. But I am concerned because I've been calling for this blow off top. We're getting a blow off top, and in a blow off top, you're only taking 4 weeks of rest before you blow off. That's not a lot of time for resting. If we don't rest very much and we keep on running, then that means we are near the top. Let me show you what the year 2000 .com crash looks like. Let's use the Nasdaq chart, right? We put it on the weekly so we can see how many weeks it was resting. See here, the crash. Nasdaq went down 90%, something like 89%. Yeah, just look at this. Just look at this. Like it basically, once you start having like only one red bar pullbacks, and then it means it's near the end. Once you start having like, this was 1, 2, 3, 4 red bars, and then we're kind of near the end, right? 1, 2, 3 red bars pull back, and then you keep going, we're near the end. What you want is for the market to actually have a rest, right? So here's 1, 2, barely a green, 3, 4, right? And then like maybe 5, 1, 2, 3. You want the market to rest a little bit before it does these breathless runs, right? One red bar, right? So right now we could be, if we just keep on running, like if the SP 500 just breaks out here and keeps on running, right? Without doing one more bounce here and give us 2 more red bars. If we don't get 2 more red bars here, like I wish we could get 2 more red bars here and bounce before we go up. Why? And you're like, oh, you want to be bearish, Pablo. It's because we want the market to spend more time, a longer number of weeks to do a pullback, right? Pullback in a bull flag, and then move up. Here, right? Longer time in a consolidation, then bounce, right? When you don't have a lot of red bars and it's all just green like this, then basically I think that's just asking for trouble. It's the final acceleration blow off top phase. When you get there, you basically have 1, 2, 3 red bars and then all greens. And 1 red bar and lots of greens. And then 1 red bar, lots of greens, and that's when it tops. That's when it tops and basically like literally blow off top and we crash. And I've been saying blow off top because you can see literally the speed of the ascent gets like used to be. This is the speed, right? We used to rise like inside the channel. And then you decide to go above the channel, so then the speed has to go even quicker, faster and faster and faster like that. The speed of acceleration gets faster and faster. So it's basically like as we saw here, the speed of acceleration, see this, right? It's the rate at which you rise. And then the speed of acceleration goes like this, like a rocket, literally goes vertical, and that's when we top, and it's a major top. You might say, oh, 2 years later, went down, 2.5 years later, went down 89%, like 80%, 89%, something like that. But it took 14 years to recover. We didn't actually make a new high until here. This was 2016, 2015, right? Literally something like if you count inflation, but in those 15 years between 2000 and 2016, if you count inflation, right? Market didn't recover to 2017, 2017, right? It's pretty crazy, isn't it? 2017. So that's what makes me worried when I see these Wall Street pumping out fake data. It's not actually fake, but it's deliberately lying data to try to fool everyone. Like they know what's going on with Strait of Hormuz, and yet they want to pretend like all the oil is coming through. They really want to pretend, and here's more fake pretending going on, right? Here's more bullshit fake pretending going on. They are going to change the method to calculate inflation, core PCE. The methodology change could lower US core PCE inflation. We've already spoken about this. He's going to come in and he's basically wants to change the measure from core inflation to what's called a trimmed mean PCE, which would lower inflation even which would lower the number, the measure of inflation even more, make people feel like, oh, we don't have inflation, oh, the Fed doesn't have much inflation to contend with, so we can cut interest rates, right? And this is some of these investing.com, they are also saying, oh, the short squeezes are more likely than a widespread selling. They're trying to say, don't panic. We're not going to get widespread selling. We're not going to get like a massive dump in the markets. We're going to get short squeezes. Shorts, if you short now, if you get out the market, you're going to get short squeezed. You're going to get squeezed, right? So it's just everywhere you see on Wall Street, they're basically trying to herd you one way. It's like sheepdogs. You know the sheepdogs? They tell the sheep, like the retail guys of the sheep, hundreds of sheep try to go this way, back into the factory for slaughter. And one more thing, Russian crude oil exports to China have fallen. We all know that, this is a chart from one of my Discord members, by the way. We all know that oil prices have gone down because supply has gone down in oil. But demand's also gone down a lot because China stopped buying oil, right? Because they have lots of reserves. They just don't want to buy oil when it's $100. So they're buying net oil now. But they also buy a lot from Russia. But look at this. In Russia, since the war started, or even before the war started, Russian oil production has peaked. For the last 4 months, it's gone from 2.85 to 1.85. It's gone down 40% to China. Why is that? Because Russia has 10 major oil refineries, and all 10 of them, by my count, have now been attacked by Ukrainian drones. Basically, they're in repair or they're stuffed. So if China can't buy from Russia and needs to buy from Iran, what do you think is going to happen to oil price? Thank you for your time. Catch you